So I don't know when you're going to be watching this video, but stocks are crazy expensive right now. The average price to earnings ratio for stocks in the S&P 500 is at 25 times trailing earnings. Now that's way above the average of 16 over the long term, and even over the average of about 20 over the last decade. In fact, stocks have only been this expensive twice before ever. Even when stocks aren't as expensive, owning investments in other assets are crucial to meeting your investment goals in 2018 and beyond. These other investments are going to smooth out the roller coaster ride of stocks. Now I've got 3 great investments that are not only going to make you a lot of money, but are going to help you protect you from that stock market crash. Give me 5 minutes and I'll make you a better investor. Hey investors, Joseph Hogue here with another video from My Stock Market Basics. Now I understand stocks don't crash just because they're expensive. As they say, a bull market doesn't die of old age. But there are a lot of indicators that are pointing to lower returns for stocks and even a stock market correction. So let's look at a few reasons why you want to look outside of stocks for investments and some of my favorite investments for 2018 and beyond. First, employment is already at a multi-decade low. Now that means employers are having a tough time filling jobs and are going to need to increase their wages. Now that's historically been a turning point for stocks because higher wages mean lower profits. A big part of this bull market has just been that continuous pumping of money into the system by the Federal Reserve and other central banks. Now the Fed has begun to reverse that and raise rates. The Bank of England also just raised rates for the first time in 2 years, and the European Central Bank is talking about putting on the brakes. So those two factors, higher interest rates and higher wages, have accounted for just about every bear market in the last 50 years. Now I've been an equity analyst for nearly a decade and have worked as an economist. I've seen this kind of thing before. Now I don't like to try to time the markets, but you definitely want to look to other asset classes for your investments. These other asset classes like real estate and fixed income are going to protect your gains from that stock market crash and are going to provide solid returns in the meantime. The first of my favorite investments for 2018 and beyond is peer-to-peer lending investing on sites like Lending Club. Now I first got turned on to this by my cousin in 2012 and have been an investor ever since. I've averaged 10% returns over the last year, which is unheard of in bond investing. So peer-to-peer lending investing isn't anything new. Banks have always taken their loans and sold them to investors through a brokerage firm or another investment house. What's different here is that peer-to-peer lending sites like Lending Club cut out the middleman. They connect borrowers directly with investors. The website takes loan applications from borrowers, and investors can invest in any loan that meets their criteria for as little as $25 per loan. The site then takes any payments from borrowers and passes it directly on to investors. Now I've got a detailed review of Lending Club and the strategies I use to invest on the platform on mystockmarketbasics.com. I'll link to it in the description, so make sure you check that out. Now I use the automated investing tool on Lending Club that automatically invests my free cash every month. Now this is important in peer-to-peer lending because you receive principal and interest payments from those loans in which you invested. By automatically investing that free cash every month, you keep your money working for you. My next favorite investment is real estate crowdfunding. Now I started my career as a commercial real estate analyst before buying my own rental properties and other commercial properties. So real estate's always had a special place in my portfolio. No other investment has created as much family generational wealth as real estate. As the man said, they're just not making any more of it. The problem with real estate investing has always been that you needed tens of thousands of dollars for a down payment on larger properties. That makes it tough for regular investors to buy different property types in different regions, and that's critical if you want to diversify your risk. Properties are also a constant pain to manage with tenant problems and costs for professional management. Now, real estate crowdfunding opened up a few years ago and I love it. Developers offer a piece of their projects to investors. You can invest as little as $1,000 in a property, and the platform handles all the payments and returns. You get professional management, a high return around 9% for debt, and into the double digits for equity. I'm investing on 2 sites, Realty Shares and Pure Street. Realty Shares is the larger real estate crowdfunding platform and offers both debt and equity investments in property. Pure Street only offers debt investments, but has a great automated investing tool that'll automatically invest that free cash flow every month. Now, I've got reviews for both Pure Street and Realty Shares, and I'll leave a link for those in the description. I'm also planning more detailed videos for each of them, so be sure to subscribe to the channel and come back for those. Now, my final favorite investment for 2018 and beyond isn't really a different asset class, but it's still a great way to protect yourself from a stock market crash and worry less about your stocks. So a trend over the last few years has been to robo-investing. No, not those robots, these robots. These are websites that automatically invest your money based on your investing needs, age, and other factors. The sites like Wealthsimple and Betterment charge one fee for the service, so you don't pay every time you go to buy a stock. Now that's going to save you hundreds of dollars a year just right there. The websites invest in exchange-traded funds, which are just groups of stocks and bonds in a sector or theme. Since you aren't picking stocks, your returns are going to be smoother, and they're usually just going to follow the market. Now, this isn't going to save your money in a stock market crash, but it will help you worry less about your investments. Basically, by having your investments automated and in large groups of stocks, it's going to keep you from those bad investing behaviors like panic selling. It's a stress-free investing option and great for investors that just don't want to have to worry about their money. So there you have it, my 3 favorite investments for 2018 and beyond. The first 2 are going to help you protect your money from a stock market crash while still providing solid returns. The third option is just going to help you worry less about your money. Now, I'm developing in-depth videos for each of these, so be sure to subscribe to the channel and come back for those. Don't forget, besides our Monday videos, we've also got the Wednesday Q&A sessions, so go to mystockmarketbasics.com/ask and I'll answer your question on a future video. Until then, happy investing.